You may be wondering, if you're invested in the stock market, how a bear market will affect your portfolio or your net worth. That's what I'm going to talk about in this video. Now, I've written an article about this over at my website, retirecertain.com. Let me scroll down to my bear here, and I'm going to open it up just because it will help me remember and make all the points that I want to make on this video. And it's a long article, so head over if you want to read the whole thing. But I'm just going to, in this video, I want to keep it short, just point out how will a stock market crash affect you, like how to figure that out, right? And these are the steps that I take when I'm invested in the stock market, which I do have some money in the stock market right now. I use this process to sort of figure out how will a stock market crash affect me. And you may know that a stock market crash is called a bear market. I have a lot of information about all that in the article, which I won't go into in here, but I do want to mention that there's this thing called recency bias, and it leads people to focus on what's happened recently in the past few years rather than what's happened in history. And so when the market is really, really strong and it's going straight up, everybody's focused on the bull market and strategies for the bull market. And when we've had a bear market, which fortunately is shorter than bull markets, everybody's thinking about the bear market after the bear market is over, maybe by a year or two or three, because that's what happened most recently. And especially with bear markets, because people still feel that pain around the bear market. So when you can sort of, if you're invested in the stock market, if you can kind of get a handle around, okay, well, what is sort of the worst case scenario, as far as the value of my investments dropping, if we have a bear market, or not if, let me catch myself, when we have the next bear market, how much will my portfolio drop in value? And remember, that's not necessarily a loss unless you sell it, but it is a drop in the value of your net worth. It's a drop in the value of your portfolio. So these are the 6 steps that I take to estimate how a stock market crash will affect me. This is, again, a rough estimate because, as I've said before here many times, we can only use probabilities and estimates with investing because we don't know for 100% certain what is going to happen. So the very first thing is I update my net worth. So right here, step 1, update my net worth. And then that's simply just going through, and I've talked about this in other videos and in my course, you just, figure out exactly where you are, add everything up. How much do you have in stocks? How much do you have in other assets like bonds or your home equity, for example? What's your total net worth? Okay, that's step 1. And then hopefully you have that handy and you don't need to really, this isn't a big task because you're always updating your net worth. You're keeping that number handy at all times. And then number 2 is update my asset allocation. So I like to look and see what's the percent I have in different types of investments, like how much do I have in stocks, bonds, and even, as I mentioned, home equity, rental properties, other assets that are on my net worth statement. So I add the total up, and then my asset allocation is just the percent that I have in stocks in this example that we're looking at to see how a stock market crash will affect you. Then step 3 is to get clear about the total amount in dollars and percent that I have in stocks in my various accounts. So if you have different types of stocks in different places, then you'll want to add all that up and get super, super clear about the total that you have in stocks. So if you have international stocks, for example, I like to handle them a little bit differently. International stocks are related to the movement in U.S. stocks. That's a whole other video that I won't go into here, but I do like to treat them separately. And then the next step is to multiply the total in stocks by the average bear market decline of 32%. We know that on average, the bear market is decline. On average, if we go back through history and look, it drops about 32%. I've done another whole video on this, and I have more information in my article at retirecertain.com on the average bear market decline. But then I assess whether I can handle this potential drop both strategically and emotionally. Again, I take the amount I have in U.S. stocks, and I'm, as an American citizen, that's where, I have U.S. stocks, and I multiply that by the average decline in previous bear markets, and that's 32%. That's the average. And then that gives me a number. I like to look at that number in both percentage and in dollar amount. That way I can really, wrap my arms around the amount of money. And then I do the same for a drop of 50%, it's closer to the more recent bear market declines that we've had. And so I like to use 50%. It's been a little bit worse depending on what you're invested in, the NASDAQ versus the S&P 500 versus individual stocks versus, dividend stocks, which don't drop quite as much, which I won't go into in this video. I have another video on that. But I call this my stock drop factor. Stock drop factor. That's kind of hard to say. But that lets me know, okay, this is about how much I could stand to lose. So can I handle this emotionally and strategically when another bear market happens? And this keeps me kind of, my peace of mind around it. And then step 5 is I check out the types of stocks I'm invested in for even more accurate data. And I was kind of touching on that in step 4. Growth stocks drop the most in bear markets typically, since they're usually the most overvalued. And as I mentioned, dividend stocks drop a little bit less. Value stocks usually drop a little bit less. And then most stock index funds that are, like, for example, the S&P 500 that you so often hear about or invest in, just kind of the standard in the U.S. market, those are more growth-oriented companies. They're huge companies, but they're more growth-oriented companies. And then, having gathered the facts, step 6, I like to brainstorm a plan with my husband. I'm married. We work on this together. I'm a little bit more of the nerd around this part of it, but I like to brainstorm how we'll survive the next crash. So what is our plan? And in updating this every year or two, you can sort of get a feel for what your at risk is, a good estimate. And you can even plan to thrive in the next bear market when you're prepared, because you have to remember that bear markets present opportunities for people that are prepared for the bear market and are completely, caught off guard, which, trust me, I have done. I'm older. I've been through several bear markets, as I point out in the article, and I've learned now how to be a little bit more at peace, knowing that this will happen. We know that bear markets will happen. And so it prepares us, this helps me feel more prepared and more strategic about what is likely to happen versus being a victim of the market and feeling like you have no control over your own net worth. That's what I wanted to share with you in this video. Again, I've got the whole article over here at Retire Certain. I'll do a couple more videos on this and talk through it. And I think it's something that a lot of people think about if they're invested in the stock market. And I think it's smart to think about it and be prepared. And when you're prepared, you're not caught off guard. So that's what I wanted to share. If you found this information helpful, I'd love it if you'd give me a thumbs up, and I'll see you over at retirecertain.com. Thanks for watching.